So, pretty steady vibes out there. Hey everyone, it's Saturday morning, December 6th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Now, yesterday we saw U.S. equities extend their winning streak again. The Standard & Poor's 500 inched up 0.19%, keeping itself just shy of a fresh record high. The Nasdaq climbed about 0.3%, marking its ninth positive close in 10 sessions, while the Dow Jones added around 0.2% after a mixed session earlier in the week. What's really driving all this is next week's Federal Reserve meeting. Investors continue to price in a quarter-point cut, and now the odds have jumped to 87%, compared with just 62% 1 month ago. Yesterday's delayed reading of the Personal Consumption Expenditures Price Index showed inflation came in roughly as forecast, and the core reading cooled slightly, up only 2.8% year over year. Consumer confidence finally ticked higher for the first time in 5 months as inflation expectations eased a bit. But the labor data gave us a mixed picture. Yesterday's Challenger report showed companies cut 71,000 jobs in November, the worst November result since 2022. Still, new jobless claims slid to their lowest level since September 2022, keeping the soft landing narrative alive. On the corporate side, big news. Netflix agreed to buy Warner Bros. Discovery's studios and streaming arm for $72 billion after a heated bidding process. Netflix slipped a bit on the news, while Warner Bros. Discovery gained about 2%. And in earnings, Hewlett-Packard Enterprise moved slightly higher even though its quarterly outlook fell short of the elevated expectations tied to artificial intelligence demand. So that's the setup heading into a huge Fed week. Alright, that wraps up today's Capital Markets Quickie. Join me again Monday morning for more market updates. See you then.